would like to share some idea or have a question, maybe later on or during the wait I'm lecture. Okay, please feel free. I'm quite easygoing. So if you guys have some questions or I'm not clear on some point, please let me know. No worries. Okay, we're gonna start for the first section. What is accounting? Okay, I have just a short question. Are you guys hearing something about accounting that is interesting, or something is really a lot of the figure, a lot of number? So in the way of accounting, that is the very important part of the business. I said the business is not just only for the private, public company or private company, it's also for the government organization as well. But in terms of the accounting, so can you see that there is a lot of the bullet, the meaning of accounting. I found that you guys can go and research that by the search engine. And the first thing I found that they said accounting is an information system that identifies, records, and communications the economic events of an organization to the interested people. I found that definition from the textbook of the Professor Kimmel, Weingart, and Kiaso. They are quite a big name in our area of the accounting. So you guys can see his textbook, their textbook, and in many versions. And it's very interesting. It's quite clear and give you the example of those things. Okay, that is the first one of the definition of accounting. Second, I found that by the website of the accountingtools.com, it's about the article wrote by some professor from the University of US. They said that accounting is the systematic recordation of the financial transactions of the business. The recordation process including setting up of the system, the record keeping, tracking the transaction within that system, and the aggregation of the result information into the set of financial report. Okay, there are so many things in that sentence. The thing is like that. Accounting is the systematic recordation. That means when you would like to record the business event or the business transaction, they have their own rules. They have their own rules and they have their own regulations, and we have to follow that. Before that, we're gonna see why we have to follow that rules and what is the beneficial after we follow that rules. I will discuss about that later on. And the third one, I also found the definition of the accounting is to record and report company's financial transactions, the financial performance, and the cash flow. You guys can see that? There are something in common, right? So the activities of the accounting process, I conclude from the many things about the definition, about the textbook, about the article. And I can find that accounting is about the process of identify what? The economics event relevant to its business. When we're talking about the business, I would like you guys to think about what is the business model. Accounting is quite related to the business model. For example, if the company is working for the merchandising, for example, buy the products and sell the product in the high price, that we call the merchandising. Or we also that talking about the service company. So there are the different types of the business model, but accounting, we also apply ourselves to identify the economic events that relating to the business model of the company, of the organization. Okay, that is the first one. The second one, that is the records. Records mean, okay, you guys know that what was it the records mean, but we're talking about those events in order to provide a history of its financial activities. And we are record based on the accounting, record by systematic and chronological daily of the events. That means if the event occur first, you have to record that first. Which one is occur later on? You have to record that the second event later on after the first one. So you cannot switch. Maybe you think, okay, may I record the third one before the first? No, we're not around that. We allow that. We recommend, no, we have to follow the rules. First come, first record. First occur, first record. And it's gonna be step by step until the end of the period. I know you guys gonna go dig down more detail in this course. And the thing that I suggest you about the accounting, that is you have to record following by the calendar. Okay? And the third one and the last one of the accounting process is about the communicate or the communications. The communication that is the correct the information of interested user by means of the accounting reports. So next, what is the accounting report? Okay, we're gonna discuss that later on. We're talking about the communication. In terms of accounting, we use the words of the financial statement as the communication, the business event of the organization. For example, that is the report of the finance, that how great you are when you are running your business. How about your profits in this process? How about your loss in this year? That is the communication that the company, the organization would like to convey to the user. Well, when we talk about the information and the communication that the financial accounting would like to convey, we're going to talk to who is the user of the accounting information. Well, actually, we can divide into many groups of the people, but in general, we can divide the accounting information, the user of the accounting information into two big groups. First, an internal user. Who is an internal user? First, that is the owner and the stockholder. Okay, let's think about that. If you guys are the businessman or business guy and you invest or you establish your company, of course, you would like to know how much you can gain for this cost, right? How much money do you gain for this period? And how well, when you're running the business for a while, for a period, maybe a month, a year, or half year, whatever, you guys would like to know what is the cash, how much cash you have, how many assets the company have, or you guys also would like to know how many expenses do you guys to pay for the next month. That is the thing why the owner and the stockholders would like to know for the accounting information. Next, the director and the manager. Director and manager who gonna be a key person of the business, of the company, of the organization. That's why when we're talking about like, okay, this year the company is very good, so the director and the manager will proud of themselves because they use the information of accounting to plan for the business. But for this year, for example, oh, it's gonna be not good for this year. A lot of things coming, a lot of factor impact for the results of the company. The director and the manager, they will think about that. How's about next year? They are gonna have a very good plan to run their business, to be the success, and then they are going to plan for the next year, for example. That is another internal users. Employee. Well, you guys will see a lot of the big company around the world this time, they quite lay off the employee, right? For the last week, I have heard about Google. I think maybe there's some tech company they have a plan to lay out their employee. So that's why employee have to know about the accounting information of their company. If they have some signal of the company that is not good for this year, the result is might be not as expect, and it might be ask some employee to leave out the company. So they're gonna have the information to plan for themselves. And the last one, that is an internal auditor. The internal auditor who is the key one as the key person who established for the corporate governance of the company, and also they audit about the compliance operation, and also in financial auditing as well. But in terms of the internal auditor, that is the first group of the people. So the next group of the user is about the external user. Who is going to be the external user of the financial information of the company? First, we're talking about the creditor. The creditor will think, okay, if that company would like to ask more money to run their business. So the creditor will analyze the company financial statement or the accounting information. If that company have a very good result, have the profit, and have a very good plan for the next year, next 2 years, or next 3 years, the creditor will allow them for some loan, and they can go to run the business. On the other hand, if the creditor found that company is something like I'm not sure, maybe the result is not good for this year, and next year is like okay, it's not good, that's it. That is for the creditor to think about. They will let them borrow the money on. For the investor, so the investor would like to invest their money to the company, right? To that organization. So before they are going to invest the company, they expect the result, it should be good. The result, it should be like, okay, they will get the money back, and they will also get the opportunity to invest for a new company, or the return is quite high. So the investor really care about the information from the accounting for their economic decision making. The governments, okay, as you know, they're really concerned about the company for the taxation. Next is about the business partner. If the company would like to looking for a new the new partner, so they might be asked for some attention from the good business partner, and they will show about the financial information to get their attention. If the information of the accounting is very good, so they may ask for attention from the new business partner. Okay. Next one is about the regulatory agency. For example, this is IFRS, as is about the regulator about the taxation. And the first and the next one, that is the International Standardized Agency. That I also talking about the IFRS already. And I will discuss about who is ISSAF, what is the IFRS later on. And the last one of the external user is about the public. So you guys would like to know how much Facebook earned for last year, how rich they are, right? And you guys may think, okay, how about that company that is very big, for example, like Microsoft, that is the Google, or how about the profit of the company as a big company, for example, Exxon, how much they can earn for last year. So we're gonna be the public and would like to know the accounting information. And next, as I already discussed, the different of the user, they need the financial statement information to support their economic decision making. Well, we're gonna discuss next that is why the different user needs the different financial information. I'm gonna discuss about the functions of the accounting in the business. Accounting, as you know, we are identifying, we are recording, and also we are provide some information for the user. But that information should contain some function. Because if we know the function of accounting, next we're gonna know how to use that properly, right? Okay, there are the main functions of the accounting for the 6 group, and I found that from the CA knowledge of the website. You can go to see that as a link. First, the measurement. They're talking about that. Accounting measures past performance of the business entity and depict its current financial position. Why am I talking about the past performance? The past performance is about something that already happened with the organization. And they're talking about something that the company ran their business for the last period. When we know the results of that performance, we will show through the financial statement. And who's gonna use that financial statement? They're gonna use the past information. But you see, okay, that is past. What they can help? Because the past can point out for the future. The past as the information, as the evidence of their company businesses. Maybe they got profit, maybe they got loss, but what is the plan? And you can believe that because it's already occurred, right? Next, as I said, forecasting. Accounting helps in forecasting future performance and the financial position of the enterprise using the past data. Based on the A point, the B point use the past performance to forecast the future. In the real world, not just only the past performance, we concern so many factors that affect to the future performance. For example, that is the economic, the world economic, about the wars, about the climate change, about everything that can affect to the future performance of the company. And the third one, decision making. Accounting provides the relevant information to the user of the accounts to aid rational decision making. That you can highlight on the decision making. I exactly mean about the economic decision making. So who's gonna know about the past performance, about the information of accounting? So they can equip that information. They can use that report to support their decision making for today and expected for the good future. Fourth, comparison and evaluation. Accounting assesses performance achieved in relation to target and disclose information regarding accounting policy and contingency liability, which play an important role in predicting, comparing, and evaluating the financial results. What is the predicting mean? It's quite similar to the word of the forecasting, but forecasting is really use the past performance, but predicting, you may think something that may be affect to the company. For example, as I said, is about like climate change, the country economics, and is about whatever earthquake, something is can be happen. So you can predict that. and you can compare for yourself with the last year, and you also compare with the competitor in the same industry. In this point, I will discuss more in later on. And the last one is about the evaluating the financial results. So you can evaluate, you can think about that the company is good or not, that is worth that you would like to invest in that company and get more money in the future. The fifth is about the control. Accounting also identifies the weaknesses of the operational system and provides the feedback regarding to effectiveness of measure adopted to check such that weaknesses. For example, accounting is an important tools of the top management of the company to seek for someone can be flawed, someone can be do some cheating with the company. Sometimes it feels like, okay, why the money, why cash in the companies disappear? Even very few amount, but the thing is like, why? Accounting can help, actually. We set the really good control about the finance and account. We have check and balance system. We also have another people to check about what is going on for this bar. And the results, the financial statement that can reflect to the really good of the control or not. When you know what is your weaknesses of the company, so the user who can use that company use that information to fix that weaknesses, to improve that weaknesses. Okay, and the last one, the government regulations and taxation. So the government can know that, okay, this company have a really good performance for this year. And for the next year, if they have something problem, there may be something is like, okay, it's not good, the effect of the economics, the effect of the exchange rate for whatever. So that government will plan the really good policy to support the business. Or if they have the really good performance, the government will ask the company, maybe they can help some taxation, or they can check what is correct taxation of that company. So that is the functional of accounting in the businesses. In terms of accounting, actually is not used for the accountant only, or not just only the director, CFO, CEO, or manager. The person who interested in that company may ask for information about the financial reporting to evaluate how interesting of that company. So when we're talking about the financial statement several times, right? I already discussed about the thing that is also talking about so many times. I'm gonna talk about the financial statement. What is the financial statement? Are you guys still remember the first page that I talking about the activities of the accounting? They are divided into three, right? The first one is identify. The second one is about the record. And the third one is about the communication. So in accounting, we cannot go to explain for everyone how good of the company, how bad of the company, how about the control of the company, how about we are really good in our core businesses. Well, the financial statement is the one that the company would like to convey. I use the word is convey. The business activities and the financial performance of the company. Well, let try to draw, okay, the spotlight. Okay, it's here. It's about the convey the business activities. What is the thing that I would like to convey? The business activities, for example, if you are in the company of the e-commerce, you guys know the e-commerce, right? please shake your head that I can expect you guys to understand that about the e-commerce, for example, like Amazon, like the Google Online, something like that. Okay. For the e-commerce, the activity is about the selling thing, right? The selling some product. The financial statement will highlight how much you can sell your product during the period of time. For example, a year. And that convert into the amount. For example, last year is about $100,000, but this year is about $500,000. So it's quite a huge money increase during this year. And the financial statement convey that message to the user. And as I said, the user uses different information. Investor may be interesting to invest in that company. The director said, okay, we have that information and we're gonna go to plan for the next year. We have to sell more product to keep that customer. On the other hand, if last year they can sell like, okay, $200,000, but this year it's reduced into $100,000. The investor will think, okay, it might be not interest to invest in this company. But for CEO, CFO, or the manager, they will think, okay, how we can improve the performance of the company for the next year, for the next 2 years, or the next 5 years. That is about the planning on the short term and the long term run of the businesses. However, they don't expect that they're gonna quit from this company soon. No, we don't do that. We run our business because we think it's gonna be long lasting, right? It's gonna be sustained. It's gonna be for like so many years to running the business. Well, when we talking about the financial performance, we're talking about the financial statements, and the financial statement gonna have someone to prove this statement is correct. You can use this statement to support your decision making. The person who can guarantee about the correct of the figure in the financial statement that we call the auditor. On the right side of the screen, you can see that is the independent auditor report. And that is quite globalized, that we're gonna have the auditor in everywhere in the world to confirm that the financial statement can be trusted, can be used to support the economic decision making. Well, in the second bullet, the financial statements are often audited by the government agency, accountants, or firms to ensure the accuracy. You see, the word is the accuracy. I'm sorry to my handwriting. Okay. And for tax, for financing, and the investing purpose. Okay. So on the right side, as you see, I show you guys is about the independent auditor's report. You can download this. That is, you can search the word like the independent auditor report, and they will put the years that you interested to find out, and you can see that this report. One of the words that I really like you guys to see that they're talking about this financial statement provide based on the international financial reporting standards, or we call the IFRS. What is that? What is the International Financial Reporting Standards? Actually, the International Financial Reporting Standard, or IFRS, is kind of like the requirement of the lot of the country around the world to provide the financial statement according to IFRS. Why we have to use the IFRS? Because we try to use the same standards around the world. For what? Why I don't use myself? Why you don't use yourself? Why around the world have to use in the same standards? Because, have you heard that before? Accounting is an international languages of the business. That means if some people would like to know that company in Thailand, that company in Indonesia, that they have the really good performance or not, we go to see their financial statement. But how do the investor know? We conduct the financial statement on the same standards. If we use a different standards, so when we go to use that to support the idea, maybe the different standard conduct the different results, and the different results is might lead to the wrong decision making. That's why around the world we use the same IFRS, use the same standard to support and conduct for the statement. Okay, we're gonna move to, oops, sorry. Wow. When I'm talking about the IFRS, okay, the IFRS is about the set of accounting rules for the financial statements of the public company that are intended to make them consistent, transparent, and easily compared around the world. Okay, first, we're gonna go to the word is about the consistent. What is the consistent mean in terms of the accounting? The consistent means something you can do that last year and you still treat that the same standard for this year, right? For example, the definition of the word cash. Last year, we used the word cash for the meaning of cash and the short-term use of the money. This year, we use the same. That is the meaning of the consistent. Transparent, I know you guys have heard that a lot. What is a transparent? The transparent is something that you can go and check for the evidence. Accounting helps you to do that. If you guys have some doubts in some company, whatever, and you guys would like to know, accounting will go to provide you most of the information and also the evidence to share that, okay, that figure is correct. The number in the financial statement, that correct. Okay, that is transparency about the thing that you present and you can check for the correct things. And the last one, I'm talking about the easily comparable around the world. As I already discussed, if you guys from like Canada and they would like to invest in our country, some company in our country, the thing that I would like to know, how much they can trust in the financial statement. If they can trust, it means that company provide the financial standard on the same standard as the other country around the world, and they can understand that. Okay, that is support the word like accounting is an international languages of the business. IFRS also issued by the International Accounting Standard Boards. This board is like the people who work to set up the standards around the world, and they come from the difference of the country. I'm sure your country have the representative to be a part of this as well, these boards as well. And IASB has the membership around the world. I'm not sure so far, but maybe for last year is about 170 something countries around the world are the memberships of the IASB. So that's why when I'm talking about like, okay, IFRS is the international standards because they have the membership around the world and they set up for the membership to set the standard to support the business around the world. And then the IFRS system is become more like more international and more famous. Could I say that? Since 2001, and they replaced the international accounting standards. However, so far, if you go to check for the IFRS website, they are still have used some of the IAS, and that's fine. They convergent that together and they can use that together under the keyword of the IFRS. So, when we're talking about the IFRS already, and we're gonna talking about the financial statement, why we use the same standard to produce that. Next, before we are going to use the financial statement, so we should know the advantage and disadvantage of the financial statement before you're going to use that. The financial statements are the correction of the summary level reports about the organization, financial results, financial position, and the cash flow. The cash flows mean cash inflow and cash outflow of the company. So they're gonna know about the liquidity, how much cash in the pocket, how they can spend, how much they can spend for this year. Okay, if they know, okay, the cash is not much, maybe we have to more save, they will save. If they have a lot of money, maybe they will think like, okay, we have a lot of money, we have a lot of cash, so we can go to invest, buying something, extended the branch into the new country. They can be that. So for advantage of the financial statements, first, to determine the ability of the business to generate cash, you see, as I said, and the source and use of the cash. The generate cash is might be from like you doing your business, you selling some product, or you selling your property. It's a different, and you will understand more when you go through this course, and you will see, okay, how to generate cash and what is the effective cash that you gain from running the businesses. Next, to determine whether the business has the capability to pay back its debts. For example, as I talked to you guys before, the creditor. The creditor will think like, okay, this company have the opportunity to pay back their debt. Okay, that's fine. They will give more loan to you. On the other hand, if they think, the bank think, okay, this company is not really good opportunity on running their businesses, and they have a lot of the big amount in debt, so the bank will deny your requirement of the money. That is from that information that's from the financial statement as well. Next, to track the financial results on trend line to spot any booming profitability issue. So the person who uses the financial statement will know how profitability of the company came from. Maybe it's from like, okay, selling the product, maybe like raising the capital, something like that. Next, to derive the financial ratio from the statement that can indicate the condition of the business. In order to indicate the condition of the business, the company will use the financial statement to evaluate a lot of the condition in terms of like, okay, the company have this issue, how we can go beyond that, how they can fix that, something like that. Okay, next, to investigate the details of certain business transaction and outline in the disclosure that accompany the statements. In terms of the financial statement, they provide a lot of the really good information to the different users, and that we call the details is about notes. After we put a lot of the figure over there, you will see the notes at the ends of that report. The notes will provide more details and the explanation about the figure. So you guys can see that later on in this course, how they can explain. I use the word explain in terms of the accounting. And the last one, to use as the basis of the annual report, which is distributed to the company investor and the investment community. The annual report seems like the thing that concludes the whole year of the company, not only in accounting. It's about their running basic businesses, their segmented, their environment concerning, sustainability, corporate governance. It's about everything of the company that conclude in the annual report, including the financial statements of the company. So that are the advantage of the financial statements. Next, we're going to discuss about the disadvantage of financial statements. First, even though I already talked to you guys, we have an auditor to check that is the thing is very good, the thing is correct, the thing is transparency. But however, the company can commit for the fraud or fraudulently manipulated of the financial statement. When they commit the fraud and the figure in the financial statement is not correct, so the user who use that figure will make the wrong decision. For example, if the bank use the information of the financial statement and then they see like, okay, the company is very good of the performance and they give the money to them. However, the bank don't know that financial statements is already manipulated and they use the wrong by give the company money. And finally, another next year, the company that's corrupt is bankrupt. But when they bankrupt, the bank will get like, okay, I can't even get any chance to get the money back. Oh, poor bank, something like that. That is the disadvantage thing about the financial statements. Some of them contain the fake information, right? Well, another thing is about the financial statement itself is contained about the historical in nature. As I told you, the data of the prior the company transaction is really hard to know for this time, right now, for today, this moment. No, the financial statement cannot be done as that. At least maybe last month, maybe yesterday, but not now. It's quite the, how could I say, the limitation of the information. That is the limitation to use the financial statement because that is contain the historical data. Okay, it's gonna be quite the last part of my lecture. This is the assumptions in the preparation of the financial statements. You see, and discuss a lot about the accounting term, who is the user of the financial accounting, and what is the financial statements mean. And also, I already talked about the advantage and disadvantage of the financial statements. Well, before we provide the financial statement, we're gonna have the very good assumptions, right? Because if we don't have the really good assumptions, the financial statement may not convey any effective information. For example, you guys may think the financial statement provide the history of the company, and how about today? how you guys to make sure that the company is going on in the next few years, in the next, even on the next year, or even in the next month. The assumption, the first thing and very important, that's from the IFRS, we're talking about the going concern. The going concern is a really important assumption to produce the financial statement or to prepare the financial statement. They said the financial statements are normally prepared on the assumptions that the reporting entity is going concern and will continue in operation for foreseeable future. It means they don't have any intention to quit this business. They still have a plan to do for tomorrow, to do for next month, to do for the next year. Yeah, that is a normal. The company don't have the plan to close down themselves. If they're running their business good, when they day by day working, running the business, they're selling things, buying things, and then they say, okay, for the next 5 years, they will get more money. In the next 5 years, they might go through the new country, expanded to the new market. So, which is called the going concern. For more details, you can go to see the conceptual framework of the IFRS information, and you can see more details about that. Next, we talk about the accrual basis. What is the accrual basis? The accrual basis is talking about the financial effects of the transaction and events are recognized as they occur and not when cash is Excuse me? Excuse me? Could you please turn off your microphone? Okay, thank you. Okay, come back to our topic. We're talking about the accrual basis. The accrual basis is talking about we record the transaction not only when we paid cash or receive cash, we consider as when it occurred, even we don't pay anything. That we call the accrual basis. Next, for the assumptions, we're talking about the stable maturing unit assumptions. It said the financial capital is matured in the normal nominal mandatory units. It is the historical cost accounting in which asset and liability are recorded at their value when the first acquired and not generally restart for a change in value. In easy word, the thing that you should record in account, it should be scale in the money. That should be value in the money. For example, you can buy this pen. You buy this pen for like $5. Okay, if you can mature, if you cannot know how much it is in money, you cannot record that into the account. So the thing that occur in the company should be value in money and record into the account. Otherwise, you cannot. That is the assumptions of this one. And the last one, unit of constant purchasing power. They say the assumption that as a stable mature unit assumption can be rejected in certain situation. Only constant real value non-monetary items are adjusted for the inflation during the low inflation or the inflation. During the hyperinflation, however, or non-mandatory items are adjusted as required under the constant purchase power of accounting. In easy words, if you have the economic inflation in your country or in your area, you have to concern or thinking that is impact to your account or not. If they are, and there is all mandatory items should be adjusted. The thing is like you really need to concern about the factors that they might impact to your item in the financial statements. And also you have to think like, okay, that is the very low inflation or there is a very hyper inflation. It might be effect to your businesses. You have to think about that factor and consider that factor in order to prepare versions of the financial statement. Okay. And for the last topic, I am talking about the qualitative characteristics of the useful financial information. The financial information that is contained in the financial statements. So we have two. First, we're talking about the fundamental qualitative characteristics. And the second one is enhancing qualitative characteristics. Okay, we're gonna discuss first. We discuss about the fundamental qualitative characteristics. First, I'm talking about the relevance. It means that information, the financial information is capable to making a differences in the decision making made by user. Information may be capable of making a difference in decision, even if some user choose not to take advantage or are already aware of it from other sources. What does this mean? It means the information should relevance to the company. If they have the relevance to the company, to the running their businesses, and relevance to preparing the financial statements, you should record that into the account. So how do we know it's relevant or not? We use the words of materiality. In the pink one, you can see on the screen. The materiality is an entity, specific aspect of the relevance based on the nature of or magnitude or both, which is of the item to which the information relates in the context of individual entity financial reporting. What is the materiality means? In easy word, materiality things means when the user knows that information, they might make the different decision making. Materiality means amount, the magnitude, or the nature of that event. If the company consider that is the materiality of the company, they will apply that to the financial statement. If they apply that event to the financial statement, it means it relevance to decision making of users. That is the first fundamental qualitative characteristic. The second one is about the faithful representation. The meaning of those things is financial reports represent the economic phenomena in words and numbers. To be useful, financial information must not only represent relevant economic phenomena, but it must also faithfulness represent the substantial of phenomena and that purpose of represent. It means the information that contained in the financial statement should be faithfulness and represent the real things, the real occurred event that the company has. Well, for the last topic is about enhancing qualitative characteristics. There are 4 enhancing characteristics of the financial statement that accounting really need to concern and have to contain these characteristics. So first is comparability. The comparability I already discussed to you guys as the first of my speech of my lecture, that the information of the company at least can be compared with themselves. For example, in this year, they have like a profit for 100,000. Compare at least for last year, they have 50,000, something like that. That is comparability. Moreover, it should be compared with your competitor in the same industry. If you are running your businesses in the real estate segment and you are quite big company, you compare with yourself for last year. Moreover, you have to compare with your competitor in the same industry, which is the real estate, to evaluate you are better than them or you are worse than them in the same market. At least you know yourself. At least if you can compare and you say, okay, I'm better, you can proud and you can go to do the best plan for the next year. However, if like, okay, this year is not a good year for us, next year we're going to have a really, really good plan to invest, to produce a product, to have a good plan to compete with your competitor in the market. That is the enhanced qualitative characteristic of the accounting in terms of comparability. Next, verifiability. It means the information faithfully represent what it proposed to be represent. It should be represent what they are. That is the verification or verifiability of the financial statement. Next is the timeliness. The timeliness means having information available to decision making in time to be capable of the influencing their condition. For example, when we talk about the financial information and they have quite late of the information, you guys can think about that. That is the market. And you have information, but that your information is very late. It's not useful at all because most of people already make their decision and not use your information of the accounting. Well, when it's late for the user, so the information that useless. When it's useless, it means you have a lot of cost and you don't have any profit. You don't have any benefit to get that information because it's too late to make decision. So the enhancing qualitative that said the accounting or accounting information or the financial information should be timeliness to support the decision making of the user. And the last one, we're talking about the understandability. What is the understandability? It's about the classifying characteristics and presenting the information clearly and concisely makes it understandable. The complex and the difficult information is useless. I would say that. Even though it's very difficult to understand, even though it's really hard to get that number, you don't tell them about how hard is it, about how difficult to understand. Accounting have to convey the message that can understandable for the user. You can get the simply explanation, the simply definition, or the message that explain about how that figure come, how is that number in the financial statement, where that come from, how to calculate that in the simply word. Because okay, I know we would like to show that the information in accounting is very hard to get, that is difficult. It's like, okay, you put a lot of the effort to get that. But if the user cannot understand how worth it, they cannot use that information to support their idea. And when they cannot use that, so it means cannot use. It's not worth that you spend a lot of time, a lot of cost to provide that. Okay, the last thing is understandability. At least everyone who has some small experience in businesses to understand that. This is the overall of my first time lecture of you guys about the introduction of the financial accounting. So if you guys have a question about what I have discussed so far, or you guys would like to share some experience or have any interesting thing, please let me know. I am willing to sharing with you guys and very welcome to answer your questions. Don't be hesitate to do that. Please let me know if you have any question, because I leave this room for like 10 to 15 minutes to answer your questions.
All right. Thank you so much, Miss, for the knowledge. All right. For all of you guys, is there any question for this material? Please raise hand and turn on your camera.
Yes, I think one of you guys have hands up.
Okay, for Era Reza. Please.
Okay, thank you, moderator. I want to introduce myself. My name is Era Reza. You can call me Eza. So I have one question. What is the difference accounting, financial accounting and management accounting? Okay, thank you.
Okay, thank you, Eka, for your question. That is very interesting. Let me go back to my slide. Okay, I will show you guys for this one. Elka asked me about what is the difference between managerial accounting and the finance accounting, right? The managerial accounting, the purpose of them that is provide information, especially for the internal user. The managerial accounting provide the information to support the internal user to make the strategy, to make sure that is the company use the strategy that support their businesses, and they provide more details about the transaction, about the company, about the businesses. Most of them use as to plan for the profit and performance. Most of them use for planning of the production. However, the financial accounting we use to support the external user as the mainly user of us. So we provide the financial statement based on the IFRS, but for the managerial accounting, we use a different of the theory in order to manage the cost, the costing, the strategic, the accounting strategic to provide, to support the internal user, I would say. That is clear? That is clear for Elga.
Clear, Miss. Thank you.
Thank you.
Thank you so much, Miss. All of you guys, have you any question?
Please feel free to asking me. I really have a good chance to be here to discuss with you guys and maybe just share my experience with you. That is very happy to be here today. So this is your chance to ask me some questions. Okay, maybe I am a really good speaker that you guys don't have any questions about that. It's clear or not? The thing is quite wonder, like I am speak is clearly, or maybe I just speak anything that you guys is not related to, so you guys don't have any questions about that.
So Miss, I think there is no question anymore.
Okay, thank you.
Okay, so we can continue to the next agenda is documentation session. For all of you guys, please turn on your camera. Okay, are you ready, guys? Okay, I count 1, 2, 3. Okay, the next slide. 1, 2, 3. Once more. 1, 2, 3. Okay, I think that's all for the next agenda is closing. Thank you very much to Dr. Thainida Uthayaphong, the attractive material. Hopefully it can help the audience to have a better understanding of introduction to financial accounting. Okay, let's close this meeting. As the master of ceremony, I do apologize to have for any mistakes during the event. Finally, thank you. Thank you for joining this event. Wassalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam.
Very much goodbye.
warahmatullahi wabarakatuh.
Yes, sir. Goodbye.